I'm Josh Lispky, Director of the GeoEconomics Center at the Atlantic Council, and I'm pleased today to launch the quarterly report of our Pathfinder project, and I welcome Nargiza Salidjanova, Director at Rhodium Group. Nargiza, thanks for being with us.
Great to be here.
So we've just launched the quarterly of the China Pathfinder project. This is a 4-year endeavor between Rhodium Group and the Atlantic Council's GeoEconomics Center. We are benchmarking the inner workings of China's economy, looking at it against the top 10 OECD economies. We have our annual report coming in October, which we'll talk about in a minute. But I wanted to get into the key findings of the quarterly updates. Before we do that, let's take a step back. A lot's happened in the Chinese economy over the past few months. Everyone in Washington is talking about it. From your perspective, what shifted?
So it's a perfect time to actually look back on the origins of the Pathfinder framework, right? We want to look at whether or not China is converging with market norms or diverging from them, whether it's choosing the path of reform or choosing path of status and kind of stagnant policy. And what we observed over the last several quarters, and in particular as the Q2 data came in, was that the Chinese government is at a crossroads. The burdens of past mismanagement are becoming very, very heavy. China's economy is in the midst of a massive structural slowdown. There is a problem in its real estate sector. Its local governments are struggling under incredible debt burdens. Its household consumption is stagnant. The youth unemployment is skyrocketing. It's not a great time. And we are looking to see if the economic difficulty, the pain, is becoming so intolerable that the government is willing to go back to reform because it needs to address those changes in a way that is not incremental or not sort of minor shifts. It really needs to tackle the big problems in the economy. And we have seen some encouraging signals. Some very authoritative economists, former government officials have made important speeches where they explicitly say that the nature of the slowdown is not cyclical, it is structural. And they're calling for reform. They're endorsing important changes to China's economy that would put it on a more sustainable path, but they would be very difficult to accomplish. In fact, a lot of people have pointed to the publication by Zhishi, which is a very important party journal, of a speech that Xi Jinping has made in 2022. And in that speech, he's admonishing the cadres not to use the same old tools, not to go back to frivolous investment or excessive construction. He's telling them, you can't wear old shoes to walk a new path, right? Does this mean that China is pivoting to reform right away? Of course not. We want to be careful and we want to monitor what the government is doing. The path that they're on right now is a challenging one. They're experiencing incredible tension and friction in the economy. How they choose to act next will determine where China's future lies.
So let's look at the quarterly findings from this new publication that we have, because it's trying to track that, exactly where the trajectory is headed. And as you said, it's too early to say that there's any reform process, and we can get into exactly the dimensions we assess that.
So China Pathfinder is built along 6 pillars. And in this particular quarter, we have decided to zero in on 2 of them, the financial system and market competition, because those are the ones where we're observing the most change, and they're the ones where the decisions by the government are kind of prompting critical outcomes for the future of China's economy. Let's look at the financial system first. So the real estate crisis and the challenges in local government debt is something that we've been talking about for a very long time, right? That has been kind of growing in importance. And why is it a good time to talk about it now? Well, for one thing, the debt levels for local government finance vehicles, which is one of the ways local governments make money to pay for their outlays, has been growing pretty dramatically. Right?
This comes from the new
and this chart is from our quarterly update. Here you can see the growth of LGFV's short-term debt. Let's just look at the 2022 data. And what this chart doesn't show, but we explore in the publication itself, is that only 20%, as of June of 2023, only 20% of LGFVs had enough cash to pay for their outstanding debt requirements, right? That's not a good situation to be in. In the meantime, for local governments, the situation is doubly bad because the second main way in which they raise funds is by selling land. And the sales of land have been going down, and we see this in June 2023, we see the results coming in like there's a 13% decline. And that's a slight rebound actually from a previous decline, which was even worse, right? So we see these local governments which are really struggling to figure out how to pay for things, right? And tackling local government debt is at the core of China's central government's ability to actually use its fiscal power to help transition the economy to a more sustainable growth level. But that actually requires a wholesale abandonment of the investment-driven model they've been pursuing previously.
Because there's another way this can go. You were talking at the end about, and we say in the title of this, green shoots for reform, and that's one way this can go if policymakers recognize the structural problems here. But the other direction is that the benchmark target of 5% must be hit, and it's the local governments who are on the hook for hitting it, and therefore they have increased pressure to spend even though it's unsustainable.
And there is no money.
Right.
They can't just sort of generate it out of thin air. There is always a way to fudge the numbers. Would not be the first time that it has happened, but that's no way to solve a long-term structural problem.
That's right. So this is if we go to LGFEs and then also on the financial system and this piece of it and the other parts you explored in the quarterly.
So we also look kind of in a big way at what's happening in the market competition sector. And we look at that from two perspectives. On the one hand, we're looking at what's happening with Chinese private businesses. On the other hand, we'll look at what's happening with foreign businesses, right? And here in the foreign business side of it in particular is where the messaging from the Chinese government has been inconsistent at best. On the one hand, they roll out the red carpet. We have senior officials month after month really talking about how foreign investment is welcomed, how they want to make the business environment even more hospitable to foreign companies. On the other hand, we see corporate raids, Mint Group, we see criticism of companies and how they choose to publish their financial analysis of their data. We also see some retaliation. So we've seen Micron come under retaliation from the Chinese government, right, over semiconductors. That is not sending the right message. Foreign companies enjoy stability. They enjoy knowing what's going to happen to them. And this is creating a lot of confusion. We also see some policy actions as well as the sort of enforcement steps that the government is taking. The new update to the anti-espionage law has sent a lot of companies into a bit of a spin. What does it mean? The same persistent problems about the nature of national security, what sort of data could become liable to review or enforcement by the Chinese government remains very much open-ended. Companies are concerned that the sort of routine things that they do in their business, like collect data on their customers or share data between different parts of their business, is going to become problematic.
Now, when we last met and did the quarterly report, we had discussed crackdown, tech sector businesses, but based on what you're saying here, it seems like none of that is necessarily moved in a positive direction.
So we see some small kind of shoots sprinkled here and there, right? In the financial sector, which I mentioned previously, we've seen the Chinese government roll out a few new changes in the FTZs. It is relevant for only a small subset of those free trade zones, but it should make it a bit easier for companies, foreign companies operating in those zones, to move their capital in and out, for example. And there are small incremental steps, right? But what the government really needs is kind of a big bang, right? A full-throated execution on the promises and reassurances they have been making to private sector.
Okay, so what should we expect going forward? We have the annual coming out in October. And between now and then, there'll be no shortage of analysis of everything that's happening inside China's economy.
Absolutely. So it would be unreasonable to expect that there's going to be sort of massive change very quickly. Chinese government doesn't usually function like that. However, there are three important things that we're watching for in the second half of this year. The first one is that we really want to see sort of more freedom for information. We want bad economic news to be accessible. It doesn't matter if this is not what the government wants to see, but it is very important, right? Even recently, we've seen some pretty troubling news when the government is discouraging economists from talking about deflation and forcing them to contort into all sorts of euphemisms. That's not a healthy environment.
And that has not been typical of Chinese economists in the past. There's always been issues about how things were shaded, but never in this, it seems, so they organized that you couldn't talk about these things directly.
And that's a real challenge, and it's not just a challenge for Chinese economists, but foreign companies, financial analysts are feeling the pressure. If they issue a negative assessment, would that come back to bite them? So that's the first one. The second one is foreign business. The Chinese government really needs to kind of walk the walk here. It's not enough to reassure them. You need to act in a way that shows them that, in fact, the business environment is stable, that they can go about their business and expect that the government will support them. And as long as they're, not doing anything that is sort of flagrantly in violation of Chinese law, there is less ambiguity. That's really important. The final piece is the Chinese private sector, very important, a critical driver of growth, of employment, of innovation, really a massive engine of China's current economic success. However, we have seen, despite the promises that the government has been making, that the private sector is sort of euphemistically lying flat. And we have a great chart in the quarterly update that shows the growth in fixed asset investment, comparing state companies here in gold on the chart and private companies in blue. And here in June 2023, you actually see a 9 percentage point difference between the investments made by private companies versus the state sector, right? That is problematic for sustainable economic future because it shows that the state is ascendant and the private sector is in retreat. The Chinese government has been, once again, saying the right things. They have recently published a 31-point decision of all the different things they're going to do to support the private sector, but it's not enough. We've heard that story before. They really need to act. And some of the really meaningful changes they can make is to actually finally even the playing field between the private sector and the state sector, which disproportionately receives too much access to credit, despite the fact that they tend to be much less efficient, much less productive, and much less innovative.
And that's where I was going to end. I was going to ask, what are you looking for in terms of signals for reform?
Right.
We're thinking back, as you said, 10 years now from
Yes.
2013 and the speech, which generated so much of the interest in the area and the hope that reform would be coming.
Right. And that's really a perfect place to stop, right? Because the next time we'll have a new update published, it's going to be the annual report. It's coming out in October. In the fall, we're expecting the next third plenum, the 10th anniversary. Now is the time for the Chinese government to come out and say, we understand, we want the economy to grow, we want the Chinese people to be prosperous, and here are the steps we're going to make. We're sort of recommitting, right, to what we said we would do, and then sort of fail to execute on in many respects.
That would be the point to look for as we get to October. And it'll be 10 years, as you said,
Yes.
and we'll look for those signals. We have the annual coming out. Nargiza, thanks to you and the entire team at Rhodium for this important work. We hope everyone checks out the full quarterly and stays tuned as we launch the annual report this October.